Test, test. Okay, this is working, fine. Let's see if this is all okay now. Here we go, we are live. Let me just check if we are streaming elsewhere as well. Hello, 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 hello. Let me just see. Can you hear me, Rose? Let's see. Okay. Let's see if this is all okay now. Here we go, we are live. Let me just check if we are streaming elsewhere. Good, good. Hi all. Hi all and welcome, welcome, welcome. Excellent. Welcome to another edition of TraderCast live trading, key trading levels for popular markets. My name is Phil. I'll be your presenter today. For those of you who haven't seen this before, if you are looking for a community of traders, check us out on TraderCast. If you're looking for the education, check out mytradingskills.com. Some of our courses are completely free. Just sign up, check them out, and see how we teach. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I managed to speak to a range of people who were just starting up, and I managed to teach some of them how to trade. Some are brand new, or some were brand new, and some were people who traded already and needed a help with a specific area of their trading activity. Now, this brings me to a disclaimer because I'll be talking about some live trades. If you haven't seen this session before, these are my opinions and experiences only. This is what I firmly believe a novice trader, somebody at the early stages of their trading career or the journey should be able to do. What I'll be doing here today, showing you some live trades and analyzing the markets, using nothing more than a price action approach, trend following, multiple layers of evidence pointing to a possible trading setup. No complicated indicators, no complicated strategies. It's a very, very simplistic way and approach to trading. Now, this brings me to through the live trades, and I'm doing this because this is a proof of concept of what we're teaching in the courses. So basically I'm applying what we're teaching in the courses in real time so that you guys can see how this works, or at least you'll understand, oh, that's what you meant when you said here are some of the live trades that I had yesterday actually. I was long Nasdaq. You saw me close that in 3 different lot sizes. I had a 5 contract long there, so I closed 2 at 12,484. Then I closed another 2 contracts at 12,477, and then finally I got out at 12,359 with the last
make everyone aware,
last
Janet Yellen
contract
currently
there.
speaking, the US Treasury Secretary. She says she expects the Senate to pass aid package soon.
I was also long DAX, similar situation. I had like a closed half and then another bit, and then there was a last contract running which I closed shortly after as well. So I'll just do half and half. It's easier to understand. 14,176 and 14,157, so I've got out of that trade. You saw my short gold being triggered. This was the pending order that was filled. It was a loss-making trade for a while, and then it turned around, so I'm happy. I'm still holding it. It's not a kind of major money-making position because the position is quite small size, but I'm keeping it open, and I'll manage it throughout today's session, and I'll show you where I am. And also you saw me short Dow yesterday during the session. This was a live trade. The analysis was done in front of people who watched, and then went short, and then I decided to close very quickly because this was a scalp, 30 points lower, and then as the price started reversing, I got out of the rest of the trade as well. Let me just see if I got the levels correct. Yes, 32,508 and 32,540. So yes, so that's it. So that's all closed. So there's nothing there, nothing else open, and nothing else opened at the moment. Markets had a massive oversold bounce yesterday, a really good bounce yesterday, and now we are seeing a bit of a reversal. So this is Dow Jones, this is DAX. Gold is rebounding off the lows, but it's still below that 1820. This is Nasdaq. Nasdaq is also falling. So it seems to me that that yesterday's positivity and the risk on market conditions are being reversed today, and they're triggered by a couple of different things. So let's talk about a few things that you should know before you start trading today. Hi Robert, how are you? What we should be paying attention to is
more from Janet Yellen. She says the economic outlook globally is challenging and uncertain.
Apologies if you can hear me gulp. It's all fear about inflation. Elon Musk's billion-dollar breakup, and everybody's talking about this NATO application. So that's basically what we should be paying attention to before US markets open. But I'll talk about important thing that's developing in Europe as well, in particular in UK. So inflation, Jerome Powell, Federal Reserve chair, he was talking yesterday saying that there should be no doubt that Federal Reserve will crush the inflation. What we need to see is inflation coming down. This is what he's saying, in a clear and convincing way, and we are going to keep pushing until we see that, he told Wall Street Journal. Over in the UK, inflation showed no sign of easing, with the headline inflation surging 9% in April. This is the highest level. This is a level not seen since 1980s, when Margaret Thatcher was the Prime Minister 40 years ago. And we all know what that led to as well, demonstrations and all sorts of different things as well. So hopefully it won't come to that as well in UK, but it's worrying. It's absolutely worrying. Talking about Elon Musk, Twitter Incorporated board said that it plans to enforce its $44 billion agreement to be bought by Elon Musk, saying the transaction is in the best interest of all shareholders. The proposed takeover includes a $1 billion breakup fee for each party, which Musk will have to pay if he ends the deal or fails to deliver the acquisition funding as promised. And Musk may have even bigger problems, a huge debt burden underpinning the deal as well. So that's everybody's talking about. NATO. Finland and Sweden officially submitted their applications to join NATO this morning, with Nordic nations needing to overcome opposition from Turkey for their bids to succeed. Russia's President Vladimir Putin said he sees no threat from the countries joining the military alliance.
Says we are committed to market-determined exchange rates.
Janet Yellen is just speaking. I don't know if you can hear the talking news as well. Neighbors joining NATO is probably far from the top of Putin's list of problems today, with the US set to block Russia's debt payment after the current sanctions exemption ends on 25th of May, potentially pushing the country into its first foreign default in a century. Speaking of defaults, Sri Lanka is set to miss the end of the grace period on $78 million of payments today, as the country spirals into chaos, fueled by lack of foreign currency and increases in inflation. So the same story is repeating all over the place. You can see that US stock futures are falling. S&P dropped. Nasdaq is falling as well. European stocks were mixed. Euro Stock 600 fell this morning as well. Miners, tech and bankers were the worst performing sectors. US 10-year Treasury yields fell 2 basis points while hovering just below 3%. US dollar rose 0.1%. Oil gained, although it's currently trading just below 114. And gold is bouncing off the lows here, but I think it still looks bearish as well. And Bitcoin is below $30,000. So that's a very quick summary of top 5 things we should know before we start trading today. Okay, so let me see if we can cover anything else. Is there anything important? I don't see any questions either here in the community or outside. But let's go and check what needs to be covered. So let's start with 79. So just looking at some pricing here. I'll pull the chart out and see if that makes sense anyway. But this is gold, guys. Gold is downtrending, clearly defined downtrend. No two ways about it. From the intraday point of view, I was looking for a rally and a kind of oversold rally in the same way as we had one here, and then the rejection in this zone. And if you remember, this was a broadcast that we did a couple of days ago, and I had a pending order. I was saying if we rally towards 1820, I want to be short, just in case if it happens while I'm asleep or while I'm away from the screen. And the reason was horizontal falling trend line and also 61.8 fib retracement from swing high to swing low, and then normally you would wait for a candle to confirm the entry and so on. But since this was a pending order, basically this is what happened. Now where to with gold now? I still feel this can go a little bit lower. I'll manage this position. So if we do see an oversold rally again, that could be another possibility for a leg lower. Or if we see a gradual move lower from these lows and then a loss of these lows, possibly a retest of these lows from underneath, that could open the way for a dip lower towards 1800 and then 1796 and then 1786 to the downside. So something like this is also a possibility. I'm sitting in the bearish camp here. My stop was initially slightly higher. I moved it closer to the entry, but I'm sitting it out. I think that possibly we could see a little bit more downside with gold. Not changing anything here. If we see a big sell-off in maybe US dollar, that could cause gold and other commodities to rally a bit. If we see some volatility return in equity markets or stocks suddenly start plummeting, then that could possibly trigger an oversold rally in gold, because it's a risk play, money out of speculative assets or positions into safe havens, and gold could be seen as one of them. So it could be oil, it could be dollar, it could be gold, it could be Japanese yen, it could be Swiss franc, so something like that. So a few things could happen, but that's where I am with the gold. I'm still happy to hold it short. it's a profitable trade at the moment, but it's a small amount of profit, and I'm just keeping it open at the moment. So let me show you that trade, and then we can talk about something else. Okay, so that's where we are. The entry was at, you can see the entry was at 1820. The stop loss, I'm going to move the stop loss lower, down here now. About 9 points of risk. So this is a 9 points of risk. I'm reducing it just in a case. I think if I see a price rally and push through 1820, I will probably close this myself. I would probably get out of this trade manually at market. I might not wait for it to hit my stop, but I have a stop just in a case. The take profit. Okay, so take profit. Since this is a swing type trade, obviously 1800 would be of interest, and then 1790, 1795, and then 1780, 1790 to the downside. So that would be, this swing low here would definitely be of interest as a potential take profit. So basically oversold rally for another leg lower, or the loss of these lows for a gradual move lower, targeting this area here. So that's the basic premise. I'm still in this trade. It's in the money. It's a small trade. Stop loss is tight. Take profit is the right level. I'm just leaving it. I'm not going to touch this at all. Hello, Raj. How are you? How are you guys? What's your take on that read that we got from inflation? Yeah. Okay, the other thing that we could possibly talk about, and this is developing right now. Let me see if I can see. Don't have it here. I might have it here. I don't normally cover this market that often, but I think it's worthwhile checking this out, guys. So this is a futures contract for palladium, and this looks to me like a downtrending market. So we have sequence of lower highs, sequence of lower lows. This potentially appears to be an oversold bounce, and then even with the shorter term, we have high, then we have another high, another high. So if we connect these, that brings us to this area here. This area here also represents a retest of this low from the 25th of April. This is the 4-hourly chart. So this looks like possibly a rising wedge or oversold channeling formation. And now we are seeing this wick here as a resistance. Now this is the hourly. This is the hourly, and hourly looks quite lovely as well. And then we have a low, higher low, higher low. So this is a trend line in an hourly, but this is daily and 4-hourly resistance. So what I'm actually looking to, what I would normally react to is either rejection at this high, or I would like to see a dip below here, a retest from underneath, and then potentially another leg lower with a stop just above here. So that's the normal reaction that I would happily be engaged with. I'll pay attention to this for a while longer, but this potentially looks like a short setup. So I might have an order. I might have an order. So I'm gonna do sell. One. That's 2060. Let's see if that triggers. And then a stop at 2090. And then a take profit at 60 and 100 points lower. That gives me 3.3 to 1 risk to ratio. So I'm going to place this limit order. It's a futures contract. It's a June expiry. It's a $20 contract. I have a single lot on this, so it's just one single. I'll see how this plays out, but it will correlate to what I'm thinking about gold as well. So I'm not filled on this. This is not at market trade, but that's a basic premise. I'll see if anything comes out of it. I'll keep you informed. It might not be triggered. But let's see. Okay. Sorry. Raj, medium-term outlook for FTSE for me is going back to 7130 level. If it manages to break 7,400, I don't see any upside at the moment. The official inflation number is bad, but real inflation on the market shelves is way worse. Yeah, I know.
Doesn't see it marking a significant change in Russia's situation.
Trading Indian, I have a number of trading accounts for different purposes. So yes, so I have a number of accounts with different brokers. I'm yet again, this is this is broadcasting in public at the moment, so it's not just in the community. I'm just promoting it, so I will not be advertising any particular broker. So whoever you trade with, your call. Just make sure you're not getting ripped off, and just make sure that your cost of trading is suitable for the type of trading that you're doing. If you're trading loads, if you have frequent trades, make sure that your spread is tight and fixed. If you are trading specific markets that might not be available with your current broker, make sure that you find a broker that offers those markets. So yeah, that's the same thing. That's the same thing. But yeah, all good.
Says US households are in good shape with money to spend.
All good. So now let me see what else would I do today. From the Dow point of view, we have about 3 minutes ahead of the open. Oh no, trading India, no. No, feel free. It's perfectly fine. It's perfectly fine. Yet again, I'm completely broker agnostic to whatever you guys do, whoever you trade with. It's your call. It's not a problem. Here we go. So where are we now with the Dow? This is this oversold bounce back that we saw yesterday. Daily still looks like it's downtrending. I did participate on a long side after my initial short yesterday, so I was really happy with that. Closed that trade. Now, what would I like to do
doesn't see the
today?
US going into recession, but there are risks from inflation.
I would like to see something like this. So we have downtrending market, we have an oversold bounce back, and this currently appears to be an attempted push lower. This type of patterns have the tendency to do something like this. Kind of retest the previous resistance and then have another leg lower. So something like that wouldn't be unusual. And then I would take the fib from high to low, and this would give me this kind of zone 50% here, possibly a cluster of these lows, and then all the way down here to 61.8. So anything from 31,990 to 31,800 would be a good area for take profit for anybody who is short. Bullish scenario would look like this. We could see a rally from here and a push higher, and an end of day close through the cluster of these previous highs from yesterday around 32,600, 650, and then possibly a retest from above for another leg higher. So that's also possible, but it seems to me that the markets appear to be exhibiting weakness today. So I don't have anything open. In a Dow at the moment. We are at the open right now. Let's see if we get this type of reaction today. So where would I like to short? 32,530 or thereabout for a reversal with a tight stop and possibly take profit. So that's where I am with Dow at the moment. Shorting now, I think it's probably too late. So I'm not. Ooh, sorry, didn't mean to do that. Shorting it now would be probably too late. I would like to see a rally and then short. Okay. Is there anything else worthwhile talking? That gold trade is still sitting there. Nothing new there. Yeah, nothing with gold at the moment. It's still there. Are you guys looking at anything? Hi Hamid, Rose, Robert, Eladio, Haifa, Suta, Darren, David, Bob. Anybody else? More selling pressure here, more selling pressure. So let me see, where are we now with a couple of other things. So let's talk about a euro dollar, because euro dollar had a nice rally yesterday, and that was triggered by some comments by European Central Bank that they are getting ready, or we should be pricing in July rate hike, and that caused a euro to rally higher. In my book, this is still downtrending market, so high, lower high, lower high, lower high. 4 hourly, this looks like a consolidation. This looks like an oversold bounce into resistance. What I would like to see is a sell-off from here to the downside, and then possibly another leg lower. I'll just put this resistance up here for now. So cluster of the lows, 104.88, call it 104.90. There is no setup as such. This is the 4 hourly, this is the hourly. This can morph into a little falling wedge, like so. And then if this is the case, then this type of patterns, you've seen this before, and if you're brand new to the channel, you can just go to mytradingskills.com, sign up. There is a free course about price action trading. So this would be the one talking about continuation price pattern. It's completely free. It's very detailed. Check it out. And it talks about how to trade this type of pattern. And this type of pattern has the tendency to do something like this. It has a tendency to break to the upside, and then we have a little retracement, and then people who trade it will take the widest point of this consolidation and extend it to the upside. People who are a little bit more speculative will take the previous significant breakout or consolidation of some sort. In our case, this would be 104.90, and then extend that, and that will give them the take profit. The stop would be below. So that's a basic premise.
Sees inflation as the biggest global challenge.
Yet again, that's a very, very basic premise on how to trade this. Prices in the UK rose by 9% in April year-on-year, a fresh 40-year high, and yet another worrying print for the Bank of England. Yes, okay. So yeah, I wouldn't go long here. I wouldn't go long here. This is from the intraday point of view. I just want to see if this plays out in any way to the downside, and that trade to the downside would look like this. So there is your support, and then this falling wedge or a pennant morphs into something like this: a loss of support, a retest from underneath. Support, loss of support becomes a newly found resistance, and then we see aggressive continuation to the downside, because then the prevailing trend that I'm talking about is here, downtrending, here, downtrending, and so on and so on. So let's see. Let's wait how this plays out. I have no trade in euro dollar. Currently just looking at it, just in case if any of you are interested in any level. So the key trading levels to the downside at 104.90. Upside is capped by 105.50. Breakouts above 105.50, a daily close above that level could trigger extension to the upside, therefore short squeeze, push higher. Alternatively, dip lower and a close below 104.90 would trigger the continuation of the downtrend, basically more selling pressure, potentially opening the way for the extension towards 104, 103.90 to the downside. Some people are still looking for parity as well. Yeah, it's all good there. Thank you.
Energy news: EU proposes release of CO2 permits from reserve until the end of 2026.
Dow is still selling.
EU seeks sale of carbon permits until proceeds reach 20 billion euros, as mentioned in yesterday's Financial Times article.
This is crude oil. Yet again, we talked about all of this yesterday. Guys, I have no trade apart from that gold. I have no trade open at the moment, and I have that pending order set up as well. Yeah, I should have jumped on a short there for both of them. But anyway, here we go. So this is crude oil. Crude oil appears to be breaking to the downside, but longer term this looks quite bullish. This looks quite bullish. So there is a previous breakout high at 111.40. So that's a key level. If I'm going to delete some of these annotations because you can't see the price. So what might happen is something like this. So we can see, no, I didn't mean to do that. I meant to do this. We could possibly see a selling pressure to down here, and then from that point we could see a little bit of a bounce to the upside. That would be the bullish scenario. Breakouts above the cluster of these highs could push it higher. Loss of these lows, something like this, and then a retest from underneath could then open the way for another leg lower towards 108, possibly even 106 to the downside. But let's wait and see. I'm bullish crude oil. I think crude oil could go much higher. It could have another 10, 15, even $20 in the price. 120, 130 perhaps. You know, I was trading oil when it was at 148 a long time ago. But yes, I was trading oil at 33. I was trading oil when it was minus. But I think crude oil could possibly push higher. But it needs a retracement. It needs to consolidate in some way. This is the 4-hourly chart. So the basic premise would be dip to 111, 111.40, and then a rally from there. That would be the basic premise. But loss of that level would then change the situation, possibly for another leg lower, for possible rally from here, and so on and so on. So that's what I'm looking at with oil. I have nothing open at the moment. I'll pay attention to it and see how it works out going forward. There is more selling pressure now in US equity indices. Dow is pushing lower, Nasdaq is pushing lower, S&P is also pushing lower. Brilliant. Going forward. Okay, is there anything else in the breaking news? No, I can't see anything. There's more selling. US equity futures fell, indicating that Wall Street recovery may be stalled as traders weigh hawkish comments from Federal Reserve Chair Powell. Treasury yields fell slightly and the dollar ended a 3-day losing streak. Contracts for all major US benchmarks were lower after the S&P 500 gained 2% in a risk rebound on Tuesday. Powell stated that the Fed will not hesitate to tighten policy beyond neutral to combat high inflation, fueling concerns that higher interest rates and surging inflation will drive the economy into recession. Risk sentiment is regaining strength despite tightening monetary conditions, Russia's war in Ukraine and China's COVID lockdowns. In his most hawkish remarks to date, Powell stated that the US Federal Reserve will raise interest rates until there is clear and convincing evidence that inflation is declining. So that's basically what it is. That's the reason for it. ECB's rate acceleration of wage inflation is now the most critical factor in determining the path of monetary policy. He also said that ECB's June GDP growth forecast is likely to be closer to the adverse and severe scenario of 2% than the baseline 3.7%, and Finland and Sweden submit applications to join NATO. So the same stories keep on repeating over and over again. Nothing really new. Nothing really new here. It's first 15 minutes of the trading. We've been broadcasting for almost 50 minutes already. If you need something covered, let me know. I'll be more than happy to do that. Otherwise, I will be stopping the broadcast shortly. and I'll speak to you all tomorrow. Just to let you know, I will be off from Friday for a week. I'll be gone for 5 days, and I'll be back with you the week after. Unfortunately, I have to travel and deal with something again, but it'll settle. It'll settle, and I'll hopefully in a month's time or so, I'll be able to go back to the normal routine of presenting daily and being community every single day, as we did for years and years and years, for the last 7 years, I suppose. But it's just one of those things. Life throws you a curveball, and you need to deal with it, especially when the family's in question. But hey, I don't want to bore you with that stuff. Anyway, on a happier note, hopefully you are all well and you are all happy and you are all looking after yourselves and you're looking forward to summertime. Any plans for the summertime, guys?
SNB's chairman, slides for speech, say negative interest rates and currency interventions necessary for the SNB to meet its mandate. So just to repeat there, from the SNB chairman's speech, it says negative interest rates and currency interventions are necessary for the SNB to meet its mandate.
Yeah, same story keeps on repeating over and over and over again.
Just after that comment, we see dollar Swiss trading at spot 9959.
Okay, guys, it was lovely talking to you all. Stay safe, happy trading, and I'll be back with you tomorrow. Thanks for watching. Thanks, bye. Thanks, Robert Bars.